A lot of times when you're looking at some articles from the mainstream media, the headline will say a lot. And even the headline within the headline can, and in this case, big time. The headline states, Key Gauge says stocks are dirt cheap now. And the headline within the headline says, should you buy? Question mark. After drops, stocks may be as cheap as a year ago. If you believe Wall Street. Haha, that's a very interesting line. So if you think, or if you believe what Wall Street is saying, then they are saying they are as cheap as they've been since their last major low. Wow, goody gumdrops. Times are looking up. But when I look at this line, if you believe Wall Street, and I look back at even some recent past or recent history, say May the 6th, 2010, the markets fall 1,000 points in intraday trading on the Dow Jones. Many stocks get crushed. They say it's a fat finger typo. So after hearing the fat finger typo, question is, do you believe Wall Street? Then they were saying, well, the way the computers are set up, they couldn't control it, and it just went much lower. So based on that line, once again, do you believe Wall Street? And even if you did believe that line, is that the type of market environment you'd want to be in, where events like that can take place that they are not able to control? Find that very interesting. And this is the same Wall Street firm that has gotten many people to invest their life savings, their retirement package, within the stock market. And the unfortunate part about that is they are not able to time the market or adjust the message of the market. For if one says, you know what, it looks like stocks are going to get hammered, I think I should get out. They call their bank. Well, you can get out of it, but there's this penalty, this X% penalty. Is that the type of system that you like to play with it? I'm just curious. But we'll move on to this article. Just a few headlines. The link's in the more information box if you want to read the entire article. And the first paragraph. With the market down 3 weeks in a row, investors, they use that word a lot within the stock market. They are understandably grim, but there is a silver lining. Stocks are looking almost as cheap as last year when prices hit 12-year lows, at least according to Wall Street analysts. And these are in no particular order, just 4 different paragraphs that I found within the page. In fact, the so-called price earnings multiple is roughly back where it stood at the end of March 2009, just as the market was starting an 80% surge. And it's interesting how they talked about the so-called, which is a data set, a stat which states that it's time for markets to go higher. And they also stated that at the end of March 29 is when it was starting an 80% surge. Well, that's not debatable. It's fact that that's false because it was the second week in March when it started that surge. But putting that aside, the third article says, a lot of investors are kicking themselves for having missed that run-up. The question now, should they jump in now to not miss another? That's very interesting because if you're at a casino playing a card game and you decide not to play a particular hand where a straight flush or 4 of a kind may have been hit and you would have won huge, would you be kicking yourself for not playing? If you're playing the Canadian lottery and you decide not to play the encore, as they call it, and you find out you would have got all the numbers right, you would have won $1 million, would you be kicking yourself for not paying the dollar to win? That's the way the gambling game works. Same sort of deal there. At least that's my personal opinion on the matter. And the final line. Some analysts are projecting earnings will hit an all-time high in a year. This is Howard Silverblatt, senior index analyst at the Standard & Poor's. That would be nice, but I wouldn't bet on it. So apparently, Mr. Silverblatt would not make that play. I guess he's not going long and bet on it, because that's exactly what it is. If you trust Wall Street, you trust the stats that they give and that we're going to be going much, much higher, then you're making a bet on it. You buy the Dow at 10,000, you buy the Dow index, and it goes up to 12, 13,000. Congratulations, you got a nice victory. That's a profit. However, let's assume now that it goes down to 9,000. You could either sell and take a loss of about 10%, or you could hold. And, well, you're fragile to losing even more fiat dollars. And those are the types of things you don't hear from the mainstream media, is how to protect from losing a lot, different strategies on entry and exit points. You don't get much of that. Question is, do you still trust Wall Street? So what we'll do now is we'll take a look at the Dow Jones, the chart. This is a daily line close only chart. They're saying to buy right in here, a shade over 10,000. If we look at the moving averages, we'll start with the yellow line, which is the 50-day moving average. We had some support. We had some support. At the start of this year, it broke below it, but right in here, it recaptured it. This is where, on a bearish side, you'd want to find resistance. It did, but it didn't go further low. Got above it. Boom. Nice move higher. However, since that point, it went below the 50, found resistance, but it did manage to get above it right in this level here. Only thing is, this is where it was supposed to find support. Not able to do it. That shows caution, or trends that should be or potentially could be going lower. The green line represents the 100-day moving average. As it was declining on the move higher, it found resistance, got above it, and then we found support. We found support, and now we're finding resistance. Once again, another caution flag. The orange line is the 200-day moving average. And it went right below it earlier this year, found resistance, and the interesting thing on this 200 average is its move recently above it that was not able to hold. And oftentimes from failed moves brings fast moves, and we have had a okay fast move to the downside since this failed move. But who knows if this fast move is even over? I think going down to about 97, 96.50 would be considered a really big, fast to failed move. So I decided to watch some Fox Business and just see what they're saying about the market. And quite frankly, on the 3 or 4 videos that I watched, they seem to be very, very optimistic. Even though we have a head and shoulders pattern on the Dow, left shoulder, head, and right shoulder. That's a very bearish pattern. And based on this pattern, it should indicate a price objective up towards about this 86, 87 area. And they're saying to buy at 10,000. Now, it was very interesting seeing how optimistic everything was sounding, because rewinding time back about a little over a year ago, the summer of 2009, they were talking about this little miniature head and shoulders pattern, which isn't as big as this one. And they were saying, head and shoulders patterns there, it's very bearish, and, well, the markets went higher. I find that very, very interesting. And the failed move was going below this line in here, which brought this fast move. So personally, when I look at the analysis, I see caution, and the probability odds state it's going lower. But just because my probability odds says it will, doesn't mean that's the case. And as the market continues trading and as the chart continues moving forward, the message of the market will continuously change. Yet if you're a 401k holder, that means nothing to you, because you're forced into cashing it out when you retire. So if you see the markets going lower, well, you can get out, but there's that penalty factor. So it's up to you. if you want to trust the Wall Street and the financial system. Talked a lot about how fraudulent I perceive it to be, and that's how I perceive it to be. Just because I perceive it that way doesn't mean you should. However, my recommendation is do your own research and try to figure out what best conclusions that you can come up with. Thank you for watching and have yourself a magnificent day. Bye-bye, everyone.